on to macro data then. India's trade gap is only getting wider and wider, with the deficit in the month of June coming in at close to $8 billion, which is the highest in 2016. Now, it's the sharp rise in oil imports that's added to the burden. Latha Venkatesh is here to take us through the details. Latha, the only silver lining really is the rise in exports.
Yes, that's right. It is a higher trade deficit, but the good news is that exports have done much better. So I'll dwell on exports first. It's up 1.3% over the previous June of 2015. And importantly, of the 30 major items of export, 20 of them have shown growth. Important among them, of course, pharma, which has always been doing well, but also chemicals, engineering exports, electronics, rice, handicraft, ceramics, which means a wide variety of exports have done well. Imports have risen month on month by about $2 billion, but year on year, actually, imports are still lower. And just getting to the trade deficit, the difference between the May trade deficit and June trade deficit is that June is higher by $1.9 billion. Of this, $1.3 billion is accounted for just by crude oil, exports being about $2 billion higher. And that's because obviously crude prices have gone up. The remaining increase is because we have imported more machinery, which is also really good news. It indicates that there is some bit of demand. The other good news from the data is that gold imports have actually fallen to as low as $1.2 billion. Actually, 8.1 billion trade deficit is not a worry, because service exports like software sales, etc., itself brings on an average in a month about $5 to $6 billion. And then there are NRIs who remit money to their families living in India. So 8.1 trade deficit is as good as no deficit at all. Very good number, really.
Okay, so we'll hold on to that silver lining, Latha. Thanks for joining in with